Success is nothing more than a few simple disciplines practiced every day. Jim Rohn. Jim is 100% correct. That's what we endeavor to do here every day. A few simple disciplines, 10 to 15 minutes, going through these chalk charts, particularly looking for weekly vertical crossovers. Next to that, 2-day recrosses, jumping into these charts and riding the trend for success. That is how simple it is. Also a lot of complicated stuff to learn as we go along, but just keep it as simple as you can. Keep it simple and straightforward. KISS, that is a great acronym. Now let's look at these charts. We see everything up for the day but black gold, oil down. That's the only thing in all these charts we're going to look at. Have a special training for you also. For those of you who are subscribers, you're not a subscriber, you need to be one, because we're probably going to relaunch this next week the options training and want you to have that. The special training today is the trend is the key. And remember, markets close Monday, open Tuesday for the holiday here in the States. Now, let's talk about how this week has ended for the S&P 500. Remember, we had a weekly vertical crossover back on the week ending May the 8th. Last week was rather lackluster. Well, the prior week ending the 15th, it was a green spinning top, but this week has been a decent week. Oh, and I'm going to put at the end of today's training, this is our comprehensive review and forecast, but I'm going to put there at the end of the training how to fill out and use the weekly market worksheet. Please make sure you print those out. PDFs are available in all the different places you are either listening to us or viewing us. You'll see it in the show notes on YouTube. You'll see it in the show notes at iTunes. You'll also see it at chartingwealth.com in the daily listing and in your email if you're a subscriber. And again, to get those special trainings, you need to be a subscriber. But again, I want you to have the PDF of the weekly market worksheet. It's available there for free. Print it out. At least fill that out once a week. And always, when you do a practice trade, use the trade worksheet. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. Nice week for the S&P. Up for the day just a little bit, 0.20%. See a bit of a slowing in the up movement. Now again, prices above the 2-day, well above the weekly. That 2-day price percent oscillator still heading up. Derivative oscillator gaining upward momentum, which is good to see. That's what we want to see. That's fine. We look at the 4-hour chart, and of course, it's still positive. Also, pretty much flat on the price percent oscillator, derivative oscillator losing downward momentum. We can see where things peaked there on Wednesday morning and afternoon and sliding sideways and down as far as our, again, that is our Heiken Ashi candlestick showing us where the average pace is showing some slowing. But again, price on that 4-hour chart still above the 2-day and the weekly. So our play is still underway, has treated us well so far. Now we leave and go to the one that's been treating us even better. That's QQQ, of course, the NASDAQ 100. Check it out. Finished our 3rd week after the weekly vertical crossover back on the week ending May the 1st. And again, things have been quite nice. Somewhere of about the 215 mark to a high of 232.14. Is that good enough? Is that good enough? What is that, $17 or so? I hope so. That's beautiful. And take your profits anytime based upon the parameters that you set. Hopefully you're using your profit and loss bands to help you make sure. Remember, what kills you are losses. You can let the profits run, but again, you never have a profit until you take it. Now we see the price percent oscillator heading up, derivative oscillator heading up, higher candle. That's all good to see. 2-day chart. Again, a little bit of a slowing. First day of this latest 2-day candle will not finish drawing until the end of the market on Tuesday. Markets again are closed Monday, so we have a red open box candle. Cautionary, derivative oscillator still gaining upward momentum. That's nice. Price percent oscillator heading up. 4-hour chart. We can see where, again, things peaked on Wednesday afternoon and sort of sliding back on that, even crossing over, going down on the 4-hour chart. Don't let that concern you too much. Do pay attention to it, but price is still well above the 2-day and the weekly. 4-hour charts, our weakest chart, smallest wave. The charts you got to pay attention to 2-day and, of course, most importantly, weekly. But remember, all the changes start on the small chart. It's when those start affecting your bigger charts that you pay more attention to them. Want to know more about what we talk about every day? Buy our book, second edition available, Charting Your Way to Wealth. Let's jump into TLT, 20-year bonds. What do we see? Had an up day, 0.60%, but we have a weekly vertical crossover. Now I'm going to talk to you about how to actually look at playing that. Those of you who are just hardcore fans of our weekly vertical crossovers, what can you do? Well, of course, you could have bought in there at about 350, 355 today. You could have gone ahead and purchased a put. You could have purchased the inverse of TLT, which is TBF. And of course, when we say purchase, we are talking about what? We are talking about practice trades. We're not a stock calling service. We're an education firm. And again, you might say, well, wait a minute, it's not crossing over on TBF. Well, I'm not playing TBF. I always stick with the charts that I follow, and we do have a crossover. Now, it is a crossover with some issues. Why? Because it was up for the day. We see the derivative oscillator gaining downward momentum. Price percent oscillator has crossed. So we've gone ahead and noted all that, but now let's pay attention to the 2-day chart. 2-day chart still going down. Look at that. We have a green candle that's drawing there, and it's a green up candle, no wick on the bottom. It does not appear, and we can see where things have flattened. So things are weak. They are weakening. We look at the 4-hour chart. Look what we see there. We see where things bottomed all the way back on Tuesday of this week. So what are we looking at? What are we thinking about? How do we play this? Was it smart to jump in this afternoon? Because we always say, look at all the charts all the time. Well, we can see where things have bottomed and been sliding sideways. How do we reduce risk when we deal with a situation we don't feel really good about? One is to do nothing, is to wait until that 4-hour chart starts to roll over and head down. You can wait on Tuesday, see how it looks Tuesday morning, see how it looks Tuesday afternoon. If it does just keep trending up, then wait until and the 4-hour chart rolls over. And if the 2-day and the weekly are still down, you can get in at that point. Now again, that's a very safe way to do it when not everything is trending the way you want it to. When your 2-day has weakened some, particularly with the sideways slide. Now, price percent oscillator is still heading down. Derivative oscillators losing downward momentum. Price percent oscillator is not heading down super strong. So again, waiting is not a problem. Another way to reduce your risk is if you want to go ahead and get in and not miss it if things roll over and head down heavy on Monday, is you don't have to enter as large a trade as you typically do, what we call the X trade. Your X trade is your standard trade. For me, it's around $100,000 to $200,000, depending on the time of year, depending on a whole lot of factors. But I pretty much look at 100 to 200. So what would you do in your practice trade? You could make it 50. That way, 50,000. That way, you reduce the size of your risk in half. And you can then add to it later if it then continues to move in the right direction. If not, you can pull it. Now that's just one simple mathematical way to do it, but you can just feel free to wait. This is why I tell you, you need to practice this. You need to figure out what works for you, what you feel comfortable with doing. And if you're not practicing, you're not learning, you're just listening to my voice, and you're maybe convincing yourself you actually know what you're doing when you've never practiced it and you really don't. So you gotta put some skin in the game and practice. Practice trade this stuff. And again, one great way to do it, paper trading works wonderfully on the TC2000 platform. And we've got a $25 discount for you. See that in the show notes. It's the paid version of TC2000 is a paid version of freestockcharts.com, which is what we use here. So check that out in your show notes. So that's where we are as far as bonds go and the possibility. Don't forget TBF is the inverse. So either look to buy a put or look to purchase TBF. And again, inverse funds, important things. We've got a great training on that. Inverse funds, how to make virtual profits when markets crash. They do have some issues with them, but it's good to know them, practice them, get comfortable with them. You need to do all this. Practice, practice, practice. First rule of trading, don't lose money. Second rule of trading, make money. But as you're learning, don't get in here and get cocky and lose your backside. Practice trade. Now, let's see what's going on with gold. Gold up for the day, 0.59%. And we see a green up candle forming, a higher high. That's good to see. Price percent oscillator's lost a little bit of its luster. Derivative oscillator still heading up on that weekly chart. We go to the 2-day. What do we see there? Well, we see things really sliding sideways now for about 5 days. And we had that bounce off. We did not have that crossover. We were hoping, but it didn't happen. We were hoping for a 2-day recross back there on the 2-day candle ending, say the 21st or so, and it just wouldn't do it and is pulling away. So we don't have a trade in gold at this time. 4-hour chart, of course, crossed over going down too, was up a little bit for the day. But gold has let us down. We'll again pay attention, watch, see what there is to see when gold's going to give us an opportunity to jump back in with perhaps a recross going up. Maybe not. Maybe there'll be enough down movement to pull the weekly over. Anyway, we'll follow that. Folks, that's where we are as we have covered our 4 big charts. I got 3 more to go through with the hardcore who care about oil, Bitcoin, and real estate. We'll talk about that briefly. But in the meantime, hope that the folks in the States have a wonderful Memorial Day weekend. You want to help us out? Buy our book, 2nd edition, Charting Your Way to Wealth, available. Explains to you what we do here and why. And also Patreon support is available. Don't forget that first week in June, we'll be having our monthly live call-in session, special training for our Patreon members. We so appreciate you. And again, appreciate all of you. Hope you have a great holiday. We're going to move on to these next charts. Let's go to Bitcoin, up for the day, 0.88%. Look at what it's doing, though. It's just stalling here over these last 3 weeks. Bitcoin hit its high all the way back on the week ending Friday, the 8th of May, and has just been slowing down. Price percent oscillator still going up. Derivative oscillator gaining upward momentum, but that price percent oscillator is weakened somewhat. We go to the 2-day chart. What do we see? That 2-day chart, actually, again, we can see where it topped and where it's heading down. Red down candle forming, solid red is first day of this latest one. And again, derivative oscillator losing upward momentum. Go to that 4-day chart. What do we see there? Well, of course, we see a drop off in the afternoon on Thursday, down on Friday morning, bit of a recovery. Like we said, up a mere 0.88% for the day. Derivative oscillator gaining downward momentum. So what we kept hoping for all throughout the course of this week and going back even further was that this 4-hour chart would cross over going up, because the 2-day and the weekly are currently going there, and you could do an up trade, an up practice trade in Bitcoin. Hasn't happened yet. Continue to watch for that over the course of this next week. Now back to the weekly. We go into real estate, up 1.35%. We do see the price percent oscillator heading up. Derivative oscillator's already gone positive, but price percent oscillator still negative, but heading up. And we sort of see where real estate has just been sliding sideways for many, many weeks after it way bottomed out at a low of 64.31. Again, it's at 72 or so right now, 73. So we'll continue to watch there. Look at the 2-day chart. It crossed over back on the 9th. It really, and again, this is the reason we wait for the weekly. What would have happened if you had jumped in on the 9th? Well, you would have bought at the high of highs, possibly, or at least somewhere where it had topped. And then what did it do? It slid sideways and down. So again, the magic of the weekly vertical crossover is there because it is the big trend that leads the way. 4-hour chart, again, sort of hitting about where it had over the last many, many days. So we want to continue to watch, pay attention to real estate? And if it does, give us a weekly vertical crossover. That's great. If it just keeps going down and that 2-day rotates back going down, then of course you might look at shorting real estate. I think you might have a lot of opportunities to practice trade that. Okay. Lastly, we go to oil. Oil down for the day, the only downer for the day, almost 4%, 3.87%. We do have the first green up candle this week, the first one we have seen in many, 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 many weeks, going all the way back to January the 3rd. Is that not crazy? Price percent oscillator is still heading down. Derivative oscillator losing downward momentum. So the trend in oil is still down. 2-day did cross over on the 19th and then up a little higher on the 2-day candle ending the 21st. And this latest one, red open box candle, slow down in that. Again, oil still trying to find its bottom. 4-hour chart peaked back on the 21st in the morning Thursday and then down. So we'll just continue to watch, see what's happening with oil. Our next, possibility, who knows? Real estate may end up over the next few weeks crossing over, going up. I won't be surprised if it doesn't. Pay attention to that. And again, look for that 4-hour chart crossing over, going up, so that you might have a chance to jump into practicing an up trade on Bitcoin. Continue to watch gold. We'll continue to pay attention to our 2 successful weekly vertical crossovers, both on the S&P 500 and the NASDAQ 100. And we'll be paying attention to see when a good opportunity to jump into this weekly vertical crossover makes itself available starting on Tuesday. For those of you who did, just as a matter of habit, jump in this afternoon. Again, fill out those trade worksheets, pay close attention. We'll see how this works for you. Remember, the power of the weekly vertical crossover rarely disappoints. God bless, my friends. All the best. Hope you have a great holiday weekend here in the States. Take care. From the whole team at Charting Wealth World Headquarters.